So welcome back, everybody, to the show, Be the Trader. Today is a freaking very special day. We have 4 total traders on this show: Harry Haas, Kyle Williams, and Jack Kellogg. And then, of course, myself, Alex Busto. So welcome to the show, guys. This is something we've never done before. I really appreciate you all joining me. And I'm sure a lot of people are going to love this because, we have questions that we're going to be answering from Harry's post where people are asking him questions. And we're just going to kind of recap the week, talk about the week, and just talk about how things have been going just in terms of trading. In other words, we'll just get it started right now. So how you guys doing?
I'm doing pretty good.
Yeah, I'm feeling good.
It was a good week for me. It's been solid. Just a little sick here, but trading went well.
Nice. So let's start off. Let's get this cooking with a question, and then we'll just get it going. So one question from Reemster, which is a funny name, at SAO Shortsman. He goes, any tricks to maintaining consistency? How do you stay away from tickers, setups you should stay away from? Let's answer that first one. Any tricks to maintaining consistency? Anyone want to take that on first?
I guess I can. Basically for me, through my strategy, it's like when I see something that isn't setting up, I'm just not going to take it because I just know that if I take that trade, it's going to be a gamble. So I guess like for me, it's more like I have a hard time taking trades that like I'm not sure of. And if I'm really not sure of a trade, I'm just going to be more patient and kind of wait for my entry as opposed to something that I know that 90% of the time is going to work. I'll always take those types of trades. But on the trades where I'm like 20% sure that this is going to work, like I'm okay with sitting it out and taking the stance of like, I'm okay with like observing and seeing if my thesis was right because I can learn from that. But those types of trades where I don't think it's going to work or I have some doubt, I'll just kind of sit back and I'll watch and I'll write it in my trade journal as like kind of a lesson as opposed to just like kind of, I don't know, just like kind of risking when I don't need to.
Cool. Anybody else want to add to that?
Yeah. What? When he asked the question, did he say taking trades you shouldn't be taking?
His question just starts off, any tricks to maintaining consistency? That's the first question he asked.
Because I've gotten a question before. Where it's like, how do you be consistent and not take trades that you shouldn't be taking? And like going on with Harry said, it's like if you know you shouldn't be taking it, like you literally know you're gambling. Yeah, like stick to what's going to make you money. Like that's the end goal here. Like if you know you're gambling or taking a trade that you shouldn't be taking, it's probably because you either consciously or subconsciously know, your odds of losing money are greater and your odds of making money are lesser. So it's like it's a very straightforward thing for me. It's like if I don't know the setup, I'm gonna lose money. Even if I make money, like I got lucky that time, and it can't be something consistent. So.
And for me, what I've been doing lately is mainly paper trading. Like whenever it's a trade that I know, like I have that feeling that I just want to trade, but now I just only do those with paper trading, and that's helping me with my itch. What about you, Jack?
For me, I track like all my trades by strategy. So I have this certain strategy that I summarize of random trades, and everything that I can't fit to a pattern, I categorize there. So after I see all my numbers, I obviously see that my equity curve for random trades is just a straight downtrend. Maybe it will have one pop here and there, but for the most part, I'm just going to consistently lose money. So from just kind of visualizing that and seeing that, I'm like, all right, maybe I shouldn't be taking this trade. And even if I am impulsive, because out of like everybody here, I probably take the most trades. I know Harry's super disciplined to his bounce strategy. Kyle's super disciplined. I take a lot of trades. So if I am going to take something, I know that I'm just going to take like a tiny, like just little feeler, and I'll probably just impulsively sell it anyway for a tiny loss, and I'm okay with that. As long as I'm not going to take a full-size risk on something that's just a complete gamble, then that's basically it for me.
And so what about, this week, let's skip on the week, everyone's been seeing just different things running. I unfortunately missed a lot because I've just been busy, but what's been one of the biggest tickers like this week that you guys feel like sticks out?
TCCO, that one definitely sticks out for me.
Yeah.
I had a decent trade on that one pre-market, so I was pretty happy. Someone just asked me a question. Did you get that dip on CCCL? No, I didn't.
So whenever you see TCCO, because I know people are going to be like, well, what if I don't know anything about that? Maybe I didn't see it. Maybe I wasn't even there that week. Put it in perspective. Paint the picture for us on what you saw pre-market and go from there.
Basically, that one on CCCL, I guess like in MIC in the morning, I was like, okay, I'm kind of looking for a trap for it to go down to kind of like the 315 area and then squeeze up, and it actually did. But I didn't really like the way it was trading, and I really wasn't a fan of that name. And kind of my goal for the rest of the year was to be in the right stocks. And a stock like that, I mean, if you take something like CCCL and compare it to, even CEI or other ones, that one's kind of like a pig for me, and a stock that I don't really like. I wasn't a fan of the way it was trading compared to CEI or the other ones that were running this week, just because the way it was kind of acting on the level 2. I didn't like the tape. It was something that I didn't really like at all, so I just kind of left it and I watched it, and then it kind of comes back to what we were talking about at the start, where like we were kind of talking about like how do you manage discipline and how do you manage stuff like that was one where I was like, okay, I could lose on this, and then it kind of pulled back. Well, it popped at the open and then kind of pulled back, and when I was watching it and I watched it, kind of pull back, I was like, okay, this is way different to the CEI than the CEI. Sorry, too many C tickers. Than the CEI stock, and the way that it kind of pulled back, and I really wasn't a fan of it, and it might have only squeezed like 20 cents, but the risk just wasn't there for me. It was like something that I probably could have lost on. So I didn't trade it. I watched it. And that was pretty much it.
Speaking of CEI, I think Kyle, you caught that. Was it yesterday? Yesterday, right?
CEI it was yesterday.
Was it the third green? It was a third failure of a green day in a row, or something like that. It was a gap down trade.
I like what Harry was talking about. I'll go to CEI, but I want to touch on TCCO real quick. I didn't trade it at all, and like I'm not like I didn't have FOMO at all that I didn't trade it. I think a lot of people want to feel like they have to trade like the biggest name or like the best, most talked about stock. And I don't think you need to do that to, like Harry said, he took the easiest move in pre-market. And then once it opens, like volume was everywhere. Like everyone thought it was going to squeeze. Everyone thought it was going to die. Like it clearly was, the hottest name. And sometimes you don't have to be in those kind of names to feel validated as a trader or make money. So I just watched, like I didn't trade any of it. I'm glad I didn't, because I would have only shorted it, and it's a good thing I didn't short it. But CEI was so on the second day. Well, so anyone who, I guess it works when you've seen tickers before. So I already know in advance that CEI is an incredibly dilutive company.
Yeah.
And if you look at the chart, you go through the filings, they've got a lot of dilution. And apparently they had stopped their dilution for, the last couple days, to potentially get their stock back up to then hopefully, or not, at least for me, a short seller, do more dilution. So after 2 days, it went from like $1 to $2 or 50 cents to 150 or something. So after day 2, it pretty much lost all of its gains and faded into the close. So for the third day, I'm thinking it's either going to bounce into a resistance level and fail, or it's going to have a red day. And so come out the pre-market open, I think it gapped down like 15-20%. And so in my mind, I was like, okay, I'm not going to short this. This is too far down. But then in pre-market, it bounced all the way back to, I think, only down like 7 or 8% of the day. So I'm thinking, this is much more intriguing now. And so I took a very small starter pre-market. I wanted to see how strong a morning spike was going to be, potentially to see if it was going to go green on the day. And after, the first 5 minutes, it couldn't spike at all. And so I added 1,000 shares. It then pulled 30 cents, covered for $300. It bounced. I reshorted the bounce, and then pulled for another 20, 30 cents. I made $300 more. So just quick $600 win.
Nice. And this is obviously a pattern that, it's something I'm very familiar with. It's something that you trade often, right?
Mm-hmm. Yeah, definitely. Yeah.
What's up, Jack? You get a little quiet over there, my man.
I mean, listed stocks aren't really my forte, so I'm just letting you
But
guys.
you caught a great one today though, right? That was I forgot what it was. It was like
Yeah,
in something.
yeah. There was some good weed stocks that were moving this week. I caught CVSI bounce from 80 cents to $1, and then it continued all the way to like $1.35. The other stock that was moving was SBES, which was just like a penny stock breakout. I made money on that from like dub 6 to dub 7 or 8, and then I rebought it today at a cent and sold it at a cent 4. And then what else moved? TMRC, that was another good one this week. That one moved took it like from 40 to 50. So that was a nice trade there too. Just like
So
these quiet
OTCs
that
are moving
OTCs
right now.
that, yeah, it was really
Some are
good this
coming
week.
back.
Coming
Yeah,
back a
we
little
just
bit.
we all just talked and connected not too long ago, and they were not moving at all. Like they were not moving.
Hey, you don't like the market? Wait a week.
I know, right? That's crazy. Well, I want to get to one of this other guy's questions, Bobby Man or Jay at Bobby Man. He says, when tracking statistics, what is the minimum win percentage and risk reward to be considered a profitable strategy, and how many samples for a trade setup are needed before drawing any significant conclusions and sizing up?
I think
I can
that's a
answer
good
the first
question for
part.
Kyle.
The first part is what risk reward and win rate is considered to be a profitable strategy. I
Sure.
forget. I think there's a chart on Google you can find, and it actually shows you. It's like a graph. So on like the one side it shows the risk reward like 1 to 2, 1 to 3, 1 to 4, 1 to 5, and on the bottom it shows win rate. And it's like if you have a 25% win rate, you could be profitable, but your risk reward ratio for every win has to be like at least 5 to 1, right? Or if it's 50%, like if you have a 50% win rate and your RR is 1 to 1, you will be break even, right? It's like a basic coin flip, versus if you had, say, a 90% win rate and a 1 to 1 win ratio, you could be profitable, right? Every loss would be as big as a win, but you're going to win 9 times out of every 10 trades. So it's not necessarily a correct risk reward, a correct win rate. It's really your personal preference and what your strategy that you may be tracking or looking for is going to give to you. Like I know for me, just from my basic skills as a trader, my risk reward is usually not great. I know traders like only want to look for 3 to 1 or 4 to 1. Most of my trades are maybe 2 or 3 to 1 at best, just because I'm usually a late trader. I usually like to wait for like multiple confirmations. So by that time, the stock is already like, if I'm shorting, it's already down a little bit. So my risk reward is off. It's only maybe 2 or 3 to 1, like I said. But my win rate is usually around 60 to 65, 70%. So, I'm okay with that because I like winning. For me, I like winning more and willing to give up a little bit of risk reward for that.
I'll post the equity simulator that I got from Brian Lee Trades, which is basically what you're talking about, Kyle. It's really good, and it's eye-opening, man, because I know all of us have different win percentages, and what's unique is I'm curious to answer that question, and anyone could take this on just to hear y'all's thoughts, is more of depending on your personal win percentage, because everyone's different. Like Kyle, you want to be in the 60 plus. Harry, do you know where you're at or what your kind of tweak is at?
I'm around like 80 something percent.
Oh Jesus. Okay, and then Jack, what you got, man?
I guess I'm just a loser at 54.
You're great.
But I'm always about risk reward, and if I can, find like my MMNFF, I made 9 to 1 risk reward on that. My TMRC, I made 5 to 1. My CVSI, I don't even know how much I made, like 13 or something. But just a few of those good trades, I can take 10 losses in a row and not really be phased and kind of wipe it out with one good trade. And that's the kind of personality that's the kind of trading that I like to do, especially on the long side. But for my shorts, I'm kind of more like Kyle based, where I just want to win, because there's a lot more fees with shorting and, ECN fees and all these broker things. But with trading with E-Trade, there's commissions free now and all this other stuff that I can just get in and get out. Whereas shorting, I kind of want to be more right when I am shorting.
That makes sense. I think what's crazy is my follow-up question that I want to add to this is more of, it's, you're 50, you're 7, you're 60, you're 80. It takes a while to get comfortable with that randomness, right? It has to, like that randomness, because you might be 60%, Kyle, but you might take 2-3 losses in a row, at some point.
Yeah.
You know what I'm saying?
Mhm.
When that happens, and especially Jack, I mean, I'm sure it's gonna happen to you more than the others because your win percentage. It's easy for you to get over that because you know now that you can be, you know, a 5-1 winner because you like that big 3R or 4R, 5R gains. How did it, you know, talk about that? Because that's challenging for a lot of people, you know, because there's one thing to know your risk reward. There's one thing to know your percentage of wins, but there's another thing to truly understand the randomness of that percentage because it doesn't mean one on, one off, one on, one off.
Yeah. I mean, I've lost 10 trades in a row before, you know, and it's just, yeah, it sucks. But like, even throughout my entire equity curve, I've never really dipped too much. Like, I've dipped like 2-3 grand out of, you know, the 150K that I made. And that's the kind of overall picture that I like to look at is like, how much of my actual profits am I losing?
Yeah. I posted a picture. I can send it to you, Alex, too. It shows your win rate and then potential the win rate you win from 0 to 100, and then the percentage of the largest drawdown of losses you could potentially have.
Oh snap! Okay.
And so for me, at like 65%, there was I think like a 50 or 60% chance that you're gonna see a drawdown of 5 losses in a row. And I talked about this when I mentioned the pictures that I know for me. In 2019, this year, my longest losing streak is 5 trades in a row. Now, could it be 6? Yeah, I think it said there was like a 30% chance of me losing 6 in a row. But the point is, it's back to your personality. Like if you know where your win rate's at, over time, you're going to be able to see that randomness and know how many times you could potentially lose. And again, this is going to vary if you don't stick to your strategy. Like with the very first question we talked about, like if you're training random shit, like you're going to get random results. Yeah. You can't be angry at yourself for taking 8 losses in a row if every loss or every trade is a different strategy. So you have to really stick to that consistency and track that system, so you can then gauge that randomness and kind of expect that randomness over time.
Yeah, and one thing I would like to point out is that you can have a 99% win rate, but if you screw up on one trade and don't cut that loss, and I know people talk about it all the time. They're like, oh, yeah, that one trade. But if you're not diligent and you're not cutting those losses quickly, like I'm okay with losing and taking a small loss because I know that when it starts to confirm again and that when I start to see something happen again, I can get in, again at any time and have way less of a loss and be way less emotional. And that's what kind of keeps me sane, and that's what kind of keeps me cutting them, is because like I know that if I lose 4 cents, well, that's way better than losing 25 or 30. And
absolutely.
And yeah, I mean, there's obviously things that you can't avoid. Like if I'm long a stock and they do an intraday offering, like there's nothing I can do. Like that stock's gonna open up lower either way. That's never happened to me yet. I'm just kind of waiting for it. But
I hope it doesn't happen, man. That does be horrible to wake up to that.
It's kind of a bucket list, but like I'm not trying for it to happen.
My number one goal is to get stuck in an intraday offering long.
Like it just hasn't happened yet, but I'm not trying for it to. But I mean, if it does happen, I want to feel good about it.
Yeah.
Absolutely.
It's one of those things where like the longer you trade in this game, like the odds of you just being in that situation, it's greater to happen. But like, yeah, like I said, like you don't expect to be in there. But like I remember myself, it's like, oh, I thought about this. I think me and Jack were long some weed stock overnight, like over summer, like maybe 6 months ago. And we were talking about like just a week before how we've never got caught in like an offering or anything. And because the OTCs rarely have offerings, it's usually listed stocks.
Yeah.
And this one OTC had an offering, but it was an offering. They said, we're going to do an offering a month from now. It was like a pre-offering. Yeah. And this stock still gapped down like maybe what was Jack, like 8%, maybe 10%. It was just more than we were willing to risk. And we're like, oh crap.
I remember being up like 1,000 and then I lost like 500 or 600. Pissed.
So we got out okay because it was like a pre-offering. But if it was the real offering, I mean, yeah, we'd have lost our ass.
It would have been dead.
Yeah.
Speaking of bucket lists, let's talk. I'm just curious. It just made me think of a question, Harry, of more of, and this can go for anybody, is what's one scary moment that happened throughout your trading career? Just one scary moment. It's just like you'll never forget. Like when you're at the bar with buddies, or you're right now chatting with a couple of buddies right now, and you're just like, man, remember when this happened to you? Anybody?
I got one if no one's. Do you got one, Harry?
I'm trying to think. You can go, Kyle, and then just let me think.
I got one because I'll never forget this. So it was December 2017 going into 2018. I believe I just gotten profitable, right? So I had just, after being down $4,000, I was now up, about maybe $1,000. I was just break even. And that was when the OTC weed run was hot. So CANN, BUDZ, CNBX, right? All these weed runners were just exploding. And I remember shorting BUDZ I think it was 650. And luckily my account was small and I was still I was not an aggressive short seller. Even now I'm still not an aggressive short seller, but I shorted 200 shares at 650. And then shares of short ran out. Where there was no more shares short, I'd be first come, first serve. So I had these 200 shares. I'm like, okay, this is it. And we're going to have this stock go down. So this stock goes down for 20 cents. And I'm like, okay, I'm right. And then it keeps going, right? And it breaks new high a day. And all of a sudden, I think everyone has to experience this at least once to just know what it feels like. Because I had never had this feeling before where it broke high a day and I no longer had, I couldn't cut it or I could cut it. But in my eyes, I don't have shares short anymore. So I just froze. It goes to 7. It goes to 8. It goes to 9. It goes to 12. And so at this point, I'm down $1,500 on a $1,500 account.
Oh my god!
And so I'm like, and I just broke even, right? So I'm just still a relatively new trader. I'm like, oh my gosh, and I'm freaking out, right? I'm thinking about how am I gonna? I can sell stuff on eBay. I can start doing an odd job. I can make this money.
Oh my!
And then the night of the night, or that's when General or Sessions came out and said weed will never be legal or whatever, and that crashed them all down. And so I ended up losing $100.
Oh wow!
But yeah, it was my first. I dodged the bullet big time, but it was it really stuck with me because it was my first experience of holding and hoping, which is just not that. This is not it. You don't do that. So
yeah. No, mine probably was a couple years ago too. Just after you kind of brought that story up, even before you started saying it and you started talking, I was thinking about one too, where it's just if you're short a low float and you get in a short trap, you're just screwed. It's like RKDA. I recognize now, from the tape and just, watching stuff and watching recordings, just kind of when those traps are starting to happen. And I think that's what makes me a decent long trader is that I kind of recognize the mindset of the short sellers are oh, it's down too far. It's not going to come back. We might as well short it now. And, I can literally just go for lunch and I'll come back and this thing will be at 0 and I'll be banking and I'll cover at the end of the day and that's it. And yeah, I love seeing those now. I'm sorry. But, that's probably my scariest moment and my best moment because I guess I like to say, a couple years ago when I did have a massive squeeze, it definitely, I never shorted a low float again after that, never again. And now I friggin' long them. So it's there you go. It's a good and a bad. Yeah.
Jack,
I definitely
OTC...
love.
Oh, go ahead, bud.
Oh, no, it's just tickers like that, MLNT this year. I'm trying to think of ones. SES, I longed that one too for almost $1 a share. MLNT, almost $1 a share. RKDA, almost $1 a share. All those traps, they happen a couple times a year. But when they do, and how to hit home, and you've been watching the tape, and you've been practicing, and you know how those things act, it just becomes second nature where you just start to load the boat on them.
The infamous tape reader over here. The infamous tape reader. Read the tape. Man, you're all about that, my man. I'm sure you get tons of messages. I see you be posting on Instagram too on your story. That tape picture is it's talking to me. It's talking to me. What's it saying, Harry? What's it saying?
Saying go long.
Yeah.
Yeah, exactly.
Hey, Jack, and OTCs, man, you have to have a story for us. You have OTCs. You got to, man. I know you.
I mean, honestly,
it's got his HEAR story, but that's not.
Oh, I know that one.
Yeah, I got squeezed on HER in 2018 in like month 6 of full-time trading. I lost all my profits on that. I've told that story a bunch of times though, so I don't really want to tell that again. But I mean, for OTCs, I don't think I've really ever gotten caught like in a panic where I've just lost a bunch of money because I'm so quick to react when these things start to sell off. Like if the bid starts getting slapped, like it's get out at all costs for me. Whereas like when I was shorting like these low floats and these NASDAQ runners, I'm like, all right, how can I stay in the trade? How can I not take a loss? And that's just was kind of a bad mentality that really screwed me over on HER because I was so convicted that this company, I'd never thought that it would go from $9 to $18 in one day when, it's somewhat of like a real company and it's already up from like $1 to 12. Yeah, Turtle Beach.
Yeah,
Yep.
Everyone has those.
Yeah.
I think
And
it's a good lesson for everyone right now is mainly the fact that number one, short's scary, right? But number two, like holding hope and is, I mean, some of us got lucky, some of us didn't, but at the end of the day, like just cut it. Cause all of y'all mentioned already now where you're at today, that when you're in something that you're not really liking how it moves, Harry or Jack or Kyle, that you cut it knowing that you can get back in now when you wait for what you said, Jack, like last week was a trigger. And it seems like, Harry, you're kind of that same way when you're looking for like, hey, if it's not acting the way I want, I'll just get out. And then if it resets up, in other words, if it's another trigger for you, then you'll get in. And Kyle, it seems like you're the same way with short selling. You're like, if it starts to set up, I'm usually not in right away at the top because I'm waiting for a couple of triggers to get hit. And then I'm getting in. And I'm willing to do that because I want 1-to-1 or 1-to-2 because I know if I do that more consistently, I can be more profitable more times than I'm wrong. So that's a great lesson that you guys all shared just now. And one question that someone said on Twitter, and this is a Harry, unless anyone wants to hit this, but I figured Harry because of tape reading. He goes, what you want to see and find on tape reading. That's his exact words. How to tell a stock is accumulating. What's the criteria of going long? Harry?
Well, see, it's different every time because like if I go back on recordings on some stocks, like I'll see like, oh yeah, it's like blatantly clear, like, oh yeah, this was like a hidden buy or this was like a hidden seller. This is how they did it this time. But then I'll go back and I'll look at another one and I'll say, it's completely different to the other stock. So I can say, yeah, just look for, ARCA or EdgeX or whatever showing 100 and filling thousands. But in reality, it's going to be different every time. I think the main thing that people should, like, people get too ahead of themselves. Like, I know I talk about the tape a lot and I talk about how it's like definitely been instrumental to my trading career. But people get too ahead of themselves when it's like, if you're not drawing your resistance and support lines, if you're not going over the stock, if you're not looking at the criteria, then you've already lost the battle. Because if it's like what Kyle said, I could have been looking for signals all day on the tape on CEI on day 2 and nothing would have happened,
Yeah.
So, I mean, for me, like it starts with an idea in my head. I'm like, okay, like I see a stock wash out immediately. I'm like I'm not a guy who sees a stock pop and wants to buy it. I see a stock wash out and immediately my brain is telling me, all right, let's look for a support line. Let's look for something like a level that I can look at. And then I'm going to look at the tape and say, okay, what's the tape saying? And the majority of the time, like I will say, like it just fucking fails. Like it doesn't work out.
No, yeah.
And it doesn't work. And everyone's like, oh, well, I saw this hidden buyer. Okay, that's awesome. You saw a hidden buyer, but he dropped lower.
Yeah.
He figured that he could fill his order from all you people who saw the same damn thing. So that's why you have to be so patient and kind of understand and just watch a lot. Like you want to get better at tape reading, watch all the recordings, watch everything. But I will stress this because everyone's like, oh, well, if I read the tape, I'm just going to become an instant profitable trader. It's the holy grail. It's the secret to success. Like, do you even know who I am? I am Jesse Livermore. And it's like, no. It's like, no. Like, think about the context and kind of the big picture. if I'm looking at a lower float on a day one and I see it sell off and I start to see short sellers kind of get too aggressive and I start to see things like that, that's the stuff that I like. That's a pattern for me. That's a play for me that I kind of like. If it's pre-market and I see a dip and I see kind of a support level hold and I like what I see there, that's something that I want to see. But if this stock is grinding lower and lower and lower and it's a higher float and the bids just keep getting taken out and it keeps going down, probably not something that I'm going to be looking at. So it comes in, it's like I have an idea. I have basic criteria that I look at. Also, if you're a short seller and you're shorting low float day ones, I have no sympathy for you because I have absolutely none. Because it's the golden rule in trading where everyone says not going to short a low float, not going to short a low float. If you don't have the discipline to say I'm not going to trade a low float stock today and I'm going to go for kind of low hanging fruit or I'm going to go for a different one, if you're shorting a lower float stock, I just don't have sympathy for you because, I'll hear the same people over and over and over again tell me, I'm never going to short a low float again. I'm never going to short a low float again. And then we have stuff come up and they're like, got squeezed today. Oh my God. It's like, man, I was long that play, Yeah. And I'm not saying this to be a dick or anything, but it's know what you're trading and know kind of the context. You're going to take losses in trading. And, that's okay. It's a part of the game and risk management will keep you safe. But if you know for a fact that the majority of people of your kind die on these types of setups, why would you do it? It's just like me. You don't see me going out and saying, hey guys, I can't wait till long a 200 mil float. That's going to be sick tomorrow. No one's ever heard me say that. You never will. Did you ever hear short sellers say, oh my God, I can't wait to short the 1 mil float, but they all do it and then they all die and they're like, well, I took that one loss and it blew up my account. It's like, had you been disciplined and just stuck to kind of the criteria and stuck to your setups, it'll be fine.
Absolutely. Well, on that note, the great Harry Haas is going to end this show with his big vent. So I wanted to say thank you guys to everyone for being on the show today. And we're going to try to keep this around 30 minutes, but we'll probably do this again in the future because this was fun, guys. So I appreciate y'all being on the show.
Yeah, and just to all the short sellers, you can unfollow me now. It's okay. I'm not going to get better.